Hi everyone, I'm Kalila Reynolds and welcome to this special feature to talk about Mayberry's brand new bond offer. You might have heard it advertising, you may have seen your favorite influencers talking about it, and there are a lot of opportunities right now in the market. But is the Mayberry bond, the newest Mayberry bond, right for you? They're seeking to raise over 2 billion Jamaican dollars. What do they plan to do with this money, and is this investment right for you right now? Here's a quick overview of the offer.
Mayberry Investments Limited aims to raise 2.2 billion initially, with the potential to increase to 3.3 billion through its initial public offering. The company intends to generate funds by issuing secured corporate bonds. These secured bonds will be divided into three parts, each tailored to attract different investor types. A total of 750 million bonds will be issued in each tranche. The durations of the tranches vary from 13 to 36 months. Mayberry plans to list the bond on the Jamaica Stock Exchange. The proceeds from the bond sales will be used to settle existing company debts and to support the expansion of Mayberry Jamaican Equities investment securities portfolio. The subscription period opened on May 3 and is scheduled to close June 7, 2024. Instructions on how to apply are available in Appendix 1 of the Bond IPO prospectus. The link is in the description.
All right, welcome back. Welcome back. Let me introduce our guest for this evening. Actually, before I do that, I see that we have some people on live. So let me shout out our live viewers. How wow is locked and loaded. We got Ingrid ready and waiting, Philip ever present, giving us the strength sign. And we have the diplomats of the era saying, let's get this money. And let me know in the comments where you're joining from, what part of Jamaica and or what part of the world. Let me know right now. And of course, drop your comments in the chat as well and your questions for Mayberry in the chat. So let me introduce our guest for this evening. And we're speaking with Dan Theoc, VP of Investment Banking at Mayberry Investments Limited. Hi, Dan. Welcome back.
Hey, Kalila. Glad to be back.
Good to have you on again, and this time for a bond offer. I think, yes, last time you were on, it was also for a bond offer. So how is this one different from the last one?
Yep, I think the last time we were doing a bond offering for Mayberry Investments Limited, which is the
Mhm.
investment bank that's been around for 37 years. This time around, we're doing a bond raise from Mayberry Jamaican Equities. It's a subsidiary of Mayberry Group Limited, but it's the vehicle that carries all of our equity investments. We have over $24 billion of equity investments, all listed companies on the stock exchange.
Okay, so I think that's a good place to start in just explaining the difference between these three: Mayberry Investments, Mayberry Group, and Mayberry Jamaican Equities. So you have Mayberry Group at the top, and you have your two subsidiaries, Mayberry Investments, Mayberry Jamaican Equities. Tell us a bit about what Mayberry Jamaican Equities does.
Yep, great. So Mayberry Jamaican Equities is essentially the brainchild of Christopher Berry, and it's managed by Christopher Berry, Mark Berry, and Gary Peart, and they're sort of the investment gurus in Jamaica. We sort of think of Chris Berry as our version of Warren Buffett, sort of self-made billionaire. And this fund is a fund that they started some 15 years ago, and they've managed to grow the fund from about $10 billion today to over $25 billion and counting.
So tell me what exactly the company does. So you said, yes, they've grown the fund. How do they grow a fund like this? How do you do that?
Great. So what we do is we take long-term positions in companies that we like, and we also trade companies on the stock market. Mayberry Investment Limited is the investment bank, and what we do is we help raise financing for our clients. And what Mayberry Investments often does is it finds good private equity opportunities. It finds clients who ultimately want to go public, and as a result, over the last 10 years, Mayberry Investment Limited has brought more companies to the stock exchange than all other brokers combined. We've listed over 22 companies on the market. So Mayberry Jamaican Equities is our arm that takes the investment in these companies, takes positions in these companies when they're going public, and is the arm by where we hold our long-term positions, usually in these companies that Mayberry Investment Limited chances are help to take public. So MJE is where we hold the investments, usually for the long term, and we do some trading of those stocks as well too. While Mayberry Investment Limited is our investment banking arm that helps all forms of clients raise financing, whether it's bonds, equities, private equity opportunities, etc.
Can you tell us some of those companies that you're invested in?
Yeah, so Mayberry Investments Limited, as I said, has helped more than 20 companies list on the stock exchange. If I started, we wouldn't finish, Kalila, but for instance, all of the Last Sales Group, CPJ, quite a few companies, Deramont Trading, etc. Over 22 companies. MJE now, on the other hand, has about 20 positions, but let me just tell you our top five. We we Supreme Ventures Limited is one of our largest positions. About 50% of the fund is in Supreme Ventures Limited, and we're the second largest shareholder in Supreme Ventures Limited, along with one of our clients who is the largest shareholder in Supreme Ventures Limited. And then we have many other top 5, top 10 positions in companies listed on the Jamaica Stock Exchange. CPJ, we're also the second largest shareholder in CPJ. We're top 10 shareholders in many other companies like Jamaica Broilers Group, largest single shareholders in Wigton Wind Farm Limited, top 10 shareholder in other companies like Dollar Financials, etc. We have large positions in NCB, GK, JMMP. So we're a big fund that buys stocks all listed on the Jamaica Stock Exchange, and we sort of hold those for the medium to long term. That's what we do, and we trade those funds to make money.
And you're the experts in that.
That's what we do.
Yeah, someone is frozen. I'm not sure if it's me or you, but one of us is frozen. But I'm saying Mayberry is the expert in that sort of thing. Now, tell me a little bit about the offer itself. So we have 3 tranches. Why is it structured this way?
Yeah, I think we've created this structure to give the opportunity for different types of investors, depending on your time horizon, your investment time horizon, to choose a bond that suits you. So whether it's a short-term 13-month bond or sort of a more medium-term 26-month bond or a longer-term 36-month bond, you've got 3 options to choose from depending on your investment horizon, and the longer tenure that you invest for, the higher the interest rate. So we just thought that would be good to give investors several options to choose from.
All right, so let's just go into the details of what these 3 options are.
Yep, good deal. So they all pay interest quarterly. They are all secured by a portfolio of Jamaica Stock Exchange listed companies that MJE has, and it's just the coupon that's different. MJE also, because of the way it's structured, it's an IBC out of St. Lucia. There will be no withholding tax on the interest that we pay to the note holders. The minimum investment is $20,000 no matter what tranche you invest in. And then we've got 3 different coupons associated with the different rates: 9.25 at the shortest end, 10% in the middle, 10.5% at the highest end. So it gives folks some good options. Hey, there's over $2 trillion worth of savings deposits at banks, probably earning an average interest rate somewhere between 1% to 2%. So the worst place to have your money is sitting down in a savings deposit account where it's not even keeping up with inflation. Even though inflation is coming down nowadays and it's in the region of 5 to 6%, it's pointless to be saving your money at 1%, 2% when inflation is 5, 6%. So here's an opportunity to park your money in one of these instruments and earn anywhere from 9.25 to 10.5%.
Exactly. That's the big challenge right now. So inflation has been trending, well, now it's trending back down apparently, but because inflation was trending up, the interest rates had been trending up, which makes bonds an attractive offer for the public. However, because inflation has been going up over the past few months, that tends to drive the equities market down, and equities are your primary business, Dan. So how have you been weathering the storm, so to speak, in terms of equities? Because I did note that there was a loss made last year.
Yep, that's correct. And again, we're long-term investors in the Jamaica Stock Exchange, so you can't look at the results for just 1 year. And in fact, when I'm encouraging folks to invest in the stock market, we sort of always say you need to set yourself like a 3 to 5 year goal and don't get worried about what happens in 6 months, 9 months, 1 year. So again, this is a fund that's grown by over $10 billion in the last 7 years. Yes, we've had a loss, a decrease in value of the fund of about $2 billion in the last year. But as you said, it's because of the high interest rate regime. We know equity prices are generally going down, and it doesn't bother me funds down by $2 billion, net up by $8 billion over the last 8 years. What's more important is that we have a good basket of equities, that we like the companies, and that these companies are poised for growth, and that we believe in the future we will continue to see that fund value growing. So it's $24 billion today. Let's come back and talk about this in a year's time, Kalila, when it will probably be 30 billion, or in 3 years' time, it'll probably be $35 billion. So let's look more at the companies we have in that basket. And I said before, we've got NCB, SVL, Wigton, Broilers, GK, Dollar, JMB, just to name a few. So this is what we do for a living: pick really good companies, invest in them for the long term, and then benefit from the growth and value of those companies.
What's your outlook for these companies? What's your outlook for the Jamaica Stock Exchange next year, 2 years, Dan?
I'm in love with the Jamaica Stock Exchange. So I give you an example. NCB at $65 is cheap, cheap, cheap. In 2 years' time, it'll probably be beyond $120. And so we're big investors in the Jamaican stock market. We're big investors in Jamaican companies. This is what we do for a living. It's why we've done more IPOs than all other brokers combined in the last decade. At Mayberry, we're big on investing in Jamaican entities and helping take them public. And that's why we label this thing profit with purpose. So we're really bullish on the stock market. And I think we're going to have a stellar year over the next 12 to 18 months. I'm going to bet 2025 will be one of our best years ever, because the market can't outperform the economy, Khalil, as you well know, and the economy is poised for growth. And we think the stock market is one of the best, asset classes that you can invest in. And now is the time to be making those investments.
Okay, 2025, next year. That's right here.
Best, best year ever. That's my bet. Best year ever for the Jamaica Stock Exchange. That's what I'm going to bet on.
Okay, well, remind me to bookmark this date so that we can come back to you next year and see what the stock market looks like next year. Now, there's a
Yeah,
clause in the
absolutely.
prospectus. I was trying to bring it up, but I'm having some internet issues and everything's moving extremely slow. There's a clause in the prospectus because some of these stocks you have put up as collateral for this bond, for this loan in the event of default, which we're going to speak that not into being. I said that's not going to happen, but you do have to have a provision, just in case. And so there's a clause in there. I want you to explain what that clause means. There are two, I can't remember the term that you used in the prospectus,
Sure,
two
sure, sure.
provisions, I'm going to call it. One of them, I think you know what I'm referring to, Dan. It has to do with holding, I think, 150% of the value of the equities.
Yeah, that's correct. So in short, we mean for this bond to be a secured bond. We mean to offer security. It's not unusual that when you're offering security, that you offer excess security. So for every, $100 we borrow, we're offering $150 of security. And what that does is gives assurance to the borrowers, or the investors in this case, that on a bad day, even if the values dropped by 40 or 50%, we would still have enough value to pay back the note holders. So we've put up a pool of our equities as collateral, and we're going to put up 150% coverage and represent to the note holders that we'll mark that to market. And if the value of the equities fall such that we're not achieving that 150%, we'll even top it up. So in this case, Mayberry has $24 billion of assets. As a total group, we only have about $8 billion of debt. So you can appreciate we have over $16 billion of spare capacity that we can offer as security to our note holders. So that's why we believe this is a very safe investment for you, because you're investing in an entity that has over $16 billion of equity, of excess capital. And our objective is to keep relatively low leverage, no more than 40% leverage, to continue grow the business. So 24 billion and growing, $7-8 billion of debt. So we're not about trying to over leverage the business. We're about using leverage responsibly to grow the business.
So what happens though if the value of those stocks that you have, those equities that you have as security, if that value actually falls?
Yeah, we throw more into the pool. So imagine again, we've only carved out $5 billion of our $24 billion of equities to put in a collateral package. And there's an independent trustee that's going to monitor the arrangement. And if at any point in time, let's say the collateral coverage falls from 150 to 125% as an example, we would just transfer more equities into that pool to ensure that we maintain the 150% collateral coverage ratio. And as I said before, because we've got so much spare capacity, it's not something you would need to worry about. Our fund would have to drop by more than 50% in value overall for us to feel any kind of pressure.
Okay. Looking at the interest rate environment, Dan, is this a fixed opportunity? Is this a fixed offer, or is it a variable rate?
They're all fixed rate offers for the duration of the 10 years. So if you're in tranche one, it's fixed for that entire period. If you're in tranche two, tranche three, similarly. So it's a fixed rate offering, which makes it a great offering for folks, because we strongly believe in the next 3 to 6 months, we're going to see interest rates going down substantially. And so this is the best time to lock in this fixed interest rate to ensure that as interest rates start to go down, your bond values will actually increase in value. So it's a good time for folks to be getting into fixed income bonds while you can still get these attractive interest rates.
Oh, what leads you to believe interest rates will be going down in substantially, as you said, in 3 to 6 months?
Yep. So if you just look at the macroeconomic environment and you appreciate that the Bank of Jamaica has increased interest rates by over 700 basis points in the last 3 years to try to help curb inflation. And here we are now, for the first time in 12 months, we've seen 2 months in a row where inflation is within the target range. So US Treasuries are like at 500 basis points. Jamaican Treasuries are at 10%. They're 500 basis points higher than the US. There's no reason for interest rates to be this high. There's no logical reason why the 30-day central bank rate is 10% per annum. And you've got to be, big banks to get that money. They're making those investments, but still only paying 1% on their CDs. So there's no logical reason for the central bank to keep interest rates high. If inflation over the next 2 or 3 months continues to run within their expected target inflation range of 4 to 6%, the governor of the central bank will, I believe, naturally start to reduce interest rates. There's no logical reason for interest rates to remain at 10%. No logical reason. So in 2 to 3 months' time, as long as inflation keeps trending within range, it's a natural given that interest rates in Jamaica are going to start to come down.
So if that's the case, why would Mayberry come out with this bond at this rate at this time, knowing that interest rates are going to go down? If you waited 3 to 6 months, you could have put it out at a lower rate, which would be more beneficial to you.
Yep. So, when you're investing as an investor, as we are, it's very important to have certainty about my cost of funding. So I don't mind borrowing at 9% if I believe the equities in which I'm investing are going to grow by 20% per annum. So I don't mind having certainty of the rate at which I'm borrowing at because I'm more focused about making the equity investment. So that's what we're focused upon, more about investing in equities. Secondly, while we hope interest rates will be trending down in the next 2, 3, 4 months, I just explained to you the circumstances which would allow that to happen. So there's a lot of geopolitical craziness going on right now. You know, I don't want to speak bad things into being. We could have an earthquake, we could have a hurricane, we could have storm damage, we could have things that cause the high interest rate regime period to last longer. So we're not interested in trying to time the market. We're interested in having a lot of time in the markets. It's more important for us to keep making the long-term investments, rolling over our notes when they become due and payable, and focusing on our long-term investment strategy.
So we have a question from Philip, which is along the lines that I was asking as well. He says, so if the BOJ drops interest rates, will that make the bonds more attractive and thus cause the price to increase? And I'm assuming he means on the bond market, on the JSE's bond market.
Yep, absolutely. For the same reason that a lot of banks are taking a banging today, the high interest rate regime has caused the value of their bonds to drop, and they've had to mark them to market and take the hit. The exact reverse is true, Philip. Great observation. So when you buy this bond today and Mayberry listed on the market, if interest rates were to fall by 300 basis points, it stands to reason that the value of the bond would increase and you would be able to sell your bond and make a profit, a capital gain, when you're selling that bond. So yes, from an investor point of view, it's a great time to make this investment if you believe interest rates have kind of peaked and are more likely to go down than to go up in the future. So great observation, Philip.
So explain how the trading on the bond market works and how it's different from trading on the regular stock exchange.
Yep. So admittedly, we also at Mayberry would like to see the bond market trading more actively. You know, in the United States of America, the bond market is bigger than the equity market. In Jamaica, the reverse is true. But the net result would be, Kalila, that somebody who's looking to buy a bond should be more focused on, hey, what yield to maturity am I going to achieve? And they would go to their broker and say, hey, I have $1 million. I'd like to invest it. How can I earn 8%? And they would go and say, oh, great, we've got a Mayberry bond, whilst the coupon is 9%. If you're happy yielding 8%, it means you should be satisfied buying the bond at a premium like 101. So you don't mind paying a little bit more for the bond as long as you achieve your objective of an 8% yield. So that 8% yield will be quite satisfactory if in 6 months' time we see interest rates are down at 7 or 6%. So again, the value of bonds are inversely related to interest rates. So if interest rates are going down, the value of bonds will go up. And as interest rates are going up, the value of bonds go down.
So basically, you can exit your position. You can sell your bond before the bond matures on the bond market if you want to.
Yep, absolutely. Absolutely. So we have an independent trustee who's going to keep the register of bonds. Those bonds, just like stocks, will trade on the stock market, and whoever's holding the note at the time when interest is paid quarterly will receive the interest. And whoever's holding the note at the time of maturity of the bond will receive the proceeds of the bond. And that's what allows the notes to be able to trade throughout the duration of the bond life.
And that's beneficial to you so that if, let's say, you need back your money, you put maybe $1 million in this bond and something happens and you need back your money, and ordinarily you wouldn't be able to get back your principal until the end of the bond, you can just go on the bond market and sell it.
Exactly correct. Or maybe you invested $1 million and you just want it back. You just want it back 200,000. You want to sell a portion of it, or you want it all back. Or maybe you're just a speculative investor. You bought the $1 million, and 4 months later you realize you can sell the $1 million note for $1.1 million and make $100,000 gain on exiting the note. So yes, all of those would be true.
All right. So explain how the interest is going to be paid now. So let's say I signed up for, just to make it easy, tranche two, because that's a flat 10%, and I put $1 million in tranche two. How would I be paid dividends?
Great. So you would receive the interest quarterly, and every quarter we would pay 1/4 of the annual coupon. So if the coupon's 10% per annum, every quarter you'd roughly speaking get 2.5% back. And you would get those payments every quarter up until the maturity date of the note. In this case, Trans 2 is a 26-month note, so you would effectively get 26 months, yeah, 6 full quarters, that's 24 months, and then the last tranche will be a 2-month tranche.
And that last tranche would be prorated, since it's
It
not the
would
full
be
quarter.
prorated. You'd get 2/12 of 10% in that last quarter, that last period.
Okay. And the first payment is actually coming up June 30th. So that's like in a month and change, a month and a few days.
Yeah, my bad. So it sounds like we have a short first period. So you're correct. So yeah, the first period is could be a month and a half away, and then you fall into the quarterly cycle thereafter, with the interest payment dates being on the calendar quarter ends, i.e. March 31st, June 30th, September 30th, and December 30th of each year.
Right. So just to do some rough maths here, guys. If you do $1 million, which is tranche at 10%, which is tranche two, then every year you get 10% of your million, which is $100,000. And that will be broken down into quarters. So you get payments 4 times for the year, every 3 months. So every 3 months you get $25,000, and that's your interest to keep. And then at the end of the period, when the thing matures, the bond matures, you get back a lump sum with the full money that you invested. Is that correct, Dan? Just verify that for me, please.
That's perfectly correct. As opposed to if you leave that $1 million in the bank on your savings account, you probably earn 2% at best on it, which means you'll earn $20,000, $2,000 for the year. So yeah, you would be earning 5 times as much on average coming through our bond. Yeah, 5 times as much coming through our bond.
Not to mention the fees that you're going to pay, keeping your money
Yes.
there. Not to mention that
Yes.
inflation is well over that, so you're basically losing money because the money is losing value.
100%.
So let me take a couple of comments, and guys, let me just apologize for my internet quality. I don't know what is going on tonight, because usually it's smooth sailing, and tonight for some reason it just decided to not cooperate. So I have a few comments here. Finessing Finance said, coincidentally, I was considering the Mayberry bond in 2022, and now he says, don't miss out on this opportunity. He adds 10% is very good for 3 years, though few, if any, currently listed stocks actually offer a dividend yield above 10%. And that was in response to Shells, who said the only thing is that the 3 years should have been like 12%. And we have seen 12% on the market recently, Dan, for that duration.
Yeah, I mean, so the difference is this one has no withholding tax. So let's make sure we're comparing apples with apples and not apples and oranges. So in the case of Mayberry Investments Limited or many other bonds you see, they may be subject to withholding tax. So you don't get the 10% net in your hand. You actually get the 10% less the 25% withholding tax. So this 10% is net in your hands, right? So that's pretty substantial. You have to be earning closer to 14% gross to turn around and net 10%. So that's a very important point that I want to make. Second point I want to make is, again, I do think where we were 9 months ago and where we are today are very different. When we raised that bond last year, we really, it was much more difficult to say we think interest rates are going to be going down in the next 3 to 4 months. I really do believe today that it's more likely than not that interest rates are going to be going down in the next 3 to 4 months. It is like really evident. Jamaica has done exceptionally well on the macroeconomic front, and it's just hard to complain with what's happening with all of the indicators, whether it's GDP growth, whether it's debt to GDP, whether it's inflation, whether it's unemployment. It's really hard to argue with the success that we've achieved. This tight fiscal monetary policy that the central bank has maintained has served us well, but I think the time is now over, Kalila, and I think we're going to see the interest rates being relaxed in the next 3-4 months, with the key item that they're watching is inflation. And if headline inflation runs within target 2 or 3 more months further, there would be no reason for the central bank to keep interest rates as high as they are.
I have a comment here from Devon, who, well, it's more of a question. Devon wants to know, when the bond lists, are there fees associated with trading on the market, and how can we ensure we're not overcharged? Again, Devon? Again.
Yep, so the fees will be set by the Jamaica Stock Exchange and the JCST, and there'll be a fixed fee. I honestly don't remember what it is now, but I'll try to get that information to you. It's not meant to be exorbitant in any way. So it's a fixed fee that will be administered by the stock exchange. So there's no chance that you're going to be overcharged in that regard.
Yeah, I think it's like $172, something thereabouts. We have a question from Instagram. Delrose wants to know, what's the minimum to be invested?
That's a good question. So one of the things we've done, Kalila, is we've come up with a $20,000 minimum investment, and then you can make additional investments in increments of $10,000. So we are trying to open this up to the ordinary investor to give them the opportunity to participate in something that usually is only open to accredited investors, to large investors. So last year I raised well over $10 billion in bonds, but mainly for private high net worth clients. And we do that through sort of an FSC process, which is not a prospectus. We call it an exempt distribution, and we only can market it to high net worths, where the minimum investment typically is like $1 million or $10 million in some instances. So we do a lot of that type of transactions for our high net worths. And we decided, you know what, it's time to try to open up these investment opportunities for ordinary Jamaicans. And so this is a second time around that Mayberry Group is doing something like this. We did it last year with MIL, and we're doing it again this year with MJE. So I really encourage folks to try to get on. Even at Mayberry, where you typically need $1 million to open up an account, if you're investing in the MJE bonds, you can come to Mayberry and open up an account with only $20,000 once you say you're buying the MJE bonds. So this is a great opportunity to get into the bonds at a much lower target price.
So Shells is asking me to convey a message to you. And Shell says, please tell him no early closure, because I have bonus money coming in a month. All depends on the market, Shell. Hope the money come through quick. We have a good question here from...
Go ahead.
Go ahead, Dan.
No, I was saying good. I was teasing and saying you're correct. It just depends on the market. I hope for her sake that we will be open for at least another 7 days, but hurry come.
We have a great question here from Devon, and Devon wants to know how much of the funds raised are going to be used to invest in other equities.
Very good. So this raise is really about refinancing our existing debt, to be quite frank. So 2.2 billion is the minimum raise, and it could be upsized by 50% to $3.3 billion. So I feel confident even if we raised, $2.8 billion, it would pretty much all be used to sort of refinance existing debt. And we have lines of credit that could be available to us. So if I see an opportunity late in the year and I want to jump on that opportunity to do a short-term trade, we do have lines that we can access to do the short-term trade. So again, Mayberry takes long-term positions, but we also make short-term trades if we see the opportunity to flip something and make a quick buck. That's a part of what we do as well too. So we're one of the biggest traders in the market, And we take pleasure in doing that. So it's not unusual to see Mayberry do a $1 billion trade or a $500 million trade, because we see a great opportunity. We see an anomaly in the pricing in the market. It's a part of how we make money.
Right, because I did notice under the use of proceeds clause in the prospectus, it says proceeds from the invitation will be used to partially repay existing indebtedness of approximately 2.2 billion, which is just about the amount that you're raising on the low side, unless you decide to upsize. It's approximately 2.2 billion owing under a revolving margin facility with Mayberry Investments Limited. The balance from the net proceeds will be used to expand the company's investment portfolio, but there wouldn't be much left, Dan, after you pay the
Yep.
2.2.
Yep, that's correct. So again, when we pay back that $2.2 billion line, we still have access to it if needs be. So if I saw a trade that I wanted to do, a short-term position, I wanted to buy $300 million of NCB in the APO, for instance, because I think 2 months later it's going to jump to $70. We could do that. So we still will have substantial lines of credit available to us to allow us to make trades. But these funds are earmarked to sort of pay down our lines of credit and give us back the capacity that we would like to have and only use where we see great short-term opportunities. So all of these proceeds up to $2.2 billion, just to repeat, will be used to retire existing debt. So we're not increasing the total debt of the business in this transaction. We're sort of just refinancing that debt. And it allows us to continue to sit on the equities that we have and not have to sell them to pay back the line of credit. So we'd much rather raise a new line, pay off the old line, and keep the stocks that we love until the appropriate time. And you will see, watch the space. I promise you, Khalil, over the next 6-9 months, you will see us make some big moves, and you'll say, now that makes sense to me.
Okay. I like the heads up. Deborah says, I love the affordability. And then we have a few questions here. People asking basically how they can invest in this. Do you need a Mayberry account, for example?
Yep, great question. So you can do it through JMB as a selling agent. So if you've got a stock brokerage account or a bank account with JMB, you can sign up through JMB. VMBS is also a partner. And of course, Mayberry Investments is the main broker assisting Mayberry Jamaican Equities in this race. So those are the 3 ways you can get it done. But if you have a stock brokerage account with any other of the big guys and you want to get in, you can actually say to your broker, hey, I would like to buy $100,000 of that Mayberry bond. Can you facilitate me in getting it? And they can reach out to us and we will help you get it as well too. So we're not forcing you to open up an account with these 3 guys. But if you do have an account with these 3 guys, you can go online and do it 1, 2, 3. If you don't have an account with those 3 guys, but you do have an investment brokerage account with somebody else, like let's just make up one, say Scotiabank, you can still say to your Scotiabank guy, I want some of the bonds. Can you help me get it? And he would be obligated to help you get it. And he would be able to do so. He'd be able to call me and say, Dan, I got a client that wants some. Can you arrange to get me some? So online through JMB, VMBS, and MIL, but you can still go through other brokerage houses. And it's not too late if you want to open up a brokerage account with any of those 3 folks to get in. It's not too late to do that.
Okay. Well, Devon, I think I'm going to give Devon the final question. Devon wants to know if you have any IPO or rights issue coming this financial year. Doesn't have anything to do with this bond necessarily, but Devon wants to scoop on what you're up to for this year.
I do. Long story short, I do. It's all about timing. So right now we are a selling agent and partner to NCB's APO at $65. I think it's a great buy. So go out, get some. And I've got about 5 or 6 really good ones in the pipeline. I can't speak to them just now. But when the timing is right, we're watching interest rates a little bit more in that regard to ensure we get good valuations. When the timing is right, you're going to see a lot of activity. I think 2025, we could see Kalila more than 10 IPOs, and I expect 2 really big ones to come forward as well too. When I say big, I mean over $5 billion. So I think next year is going to be a great year for the market. And Devon, you should be building your portfolio. So you need to have real estate as an asset class, you need to have equities, and you need to have bonds. They're not meant to be mutually exclusive, buddy. So get yourself some bonds now, and then prepare yourself for the IPOs that are to come.
So guys, Dan is putting you in on some game. If next year is all of this activity is going to be happening, you want to be in before that happens. You want to be in before the opportunities. Well, not saying that this isn't a major opportunity too, Dan, but before the cycle trends up next year. Plan B Design says, for a very long time, all I could do was visit the Mayberry website and look at it. I never had the $1 million to invest. Now I can. Looking forward to jumping into this bond. We have Shells who says 10 IPOs. That's crazy. And then Wayne just wanting some clarification if the bond is in USD or JMD.
This one's in Jamaican dollars. Did 9% sound too low, Wayne? It's Jamaican dollars. But if you want US dollar bonds, I got some coming as well too. So check me back in a month's time and I'll show you some US dollar bonds. But this one's in Jamaican dollars. And I think it's a great rate. Of course, you won't see US dollar bonds at 9 or 10%. I think something would probably be wrong if you see a US bond at 10%. Maybe you should avoid that company. I don't know. But this one's in Jamaican dollars.
All right, good. So the offer is open now and we can find it through your broker, or where else can we go? What's the easiest way, Dan?
The easiest way is to go to the Jamaica Stock Exchange website. Make sure you read the prospectus, have the full understanding, and then any of the three guys that are electronic, JMMB, VMBS, or Mayberry Investments Limited. Those would be the three easiest ways.
Awesome. And right, we have the link to the prospectus in the description of this video as well. So you can just scroll down and you'll see the link, click it, read the prospectus. Makes for pretty good reading, pretty interesting reading, and then apply through your agent and get in on the Mayberry bond. Of course, this is not investment advice. This is for educational purposes only. Consult your licensed financial advisor before making any investment decisions, but you have been educated. Thank you so much for joining us, Dan. Anything that you want to add before we go?
No, I just want to say I am a licensed advisor, so feel free to call me, folks. This is a great investment opportunity. But of course, read that prospectus. And Kalila, we appreciate you for having us. I really want to say I love what we do at MJE. It's all about investing in the Jamaica Stock Exchange and companies that want to go public. It's what we've been doing for over 37 years, and it's what we're going to be doing for the next 37 years. So come along for the ride, guys. We look forward to it.
Well, good luck on this offer, Dan. I'm sure it will do quite well based on what you have to offer. And of course, guys, check the description, read the prospectus, and if this sounds like something that you are interested in, that suits your investment goals and your needs right now, then go ahead, contact your broker and apply. Thank you so much for tuning in. I'm Kalila Reynolds. See you tomorrow for Taking Stock.